News today of a possible stimulus to reinvigorate the Japanese economy. Experts say that this economy has been underperforming for the last 20 years and then took a real knock with the global credit crisis. What are the challenges Japan is facing?
I think the challenges are myriad, and many of them we're aware of. The fact that the Japanese economy is heavily based on export-led growth. A lot of that export-led growth has been going towards advanced economies. Obviously, we're seeing a tremendous decline in demand from those economies during the recession. And also the Japanese economy, as you mentioned, has underperformed over the last 2 decades, has lagged even the advanced economy growth by over a percentage point in average growth over the last 2 decades. And I think more recently we're looking at some internal dynamics of the Japanese economy, such as the demographic challenge which they're facing, which is exerting some pressure. But it is important to outline that Japan remains, as you mentioned at the outset, a significant global player and one of the world's largest exporters, one of the world's largest sources of capital, biggest exporters of capital in the sense of it's a shareholder in the global economy. So it's important to underline that view, and I think Japan is certainly facing anxieties. But going forward, we expect the country to remain a very formidable player, particularly in the African context.
With the need to possibly reconfigure its economy domestically for optimum growth, does that mean a change in approach to Africa and other emerging markets?
Absolutely. I mean, what we've seen is since the turn of the century, or since over the course of the last decade, we've seen Japan reorient its economy very strongly towards emerging markets. This is where the growth has been. This is where the consumer market potential is located for Japan's very ambitious high-end manufacturers and exporters. And also we're seeing this as emerging markets across the board are providing the most fertile avenues of growth for advanced and intra-emerging market trade and commercial opportunities. So Japan, like most advanced economies, is considering these emerging markets in terms of its future prognosis, and China has been the most immediate market that Japan has expanded into. And last year we even saw China become Japan's biggest export market, overtaking the US, which, if you consider what the volumes were at the turn of the century, is quite a seismic shift that we've seen taking place. And across the board, we're seeing Japan then reorient its strategies to include some other Latin American markets. Asian markets, of course, are the low-hanging fruit for Japan. And increasingly, we're seeing some Japanese firms engage more proactively in Africa as well.
All right, let's talk about the Yokohama Declaration, because it's through this text that Japan has pledged to double aid to Africa. But if they're facing internal economic challenges, how feasible is it to double aid?
I think it's feasible. I mean, we need to consider the overall volumes of aid. Currently, Japanese aid to Africa is, as a proportion of its total aid, is around 23% of aid to developing countries. But overall, it remains less than $2 billion, which is sustainable for the Japanese economy. And I think the strategic priority of ingraining itself more meaningfully in African economies, using development assistance, technical assistance and aid as a beachhead into these markets, means that it can afford to double or at least extend that development assistance going forward to 2012, because relatively speaking, the volumes to the Japanese economy are fairly marginal. And we've seen that in terms of aid flows from certain other markets, even the advanced economies, remaining fairly stable even through the financial crisis. When all economies throughout the advanced world are facing these anxieties, they're still able to maintain and even increase aid disbursements to Africa because of their relative size.
Let's talk about Japan's approach to overseas development assistance. People say it's got a more cohesive and comprehensive approach. It focuses on technical assistance as opposed to donor aid, as we understand it. They've partnered with the African Development Bank, with the United Nations and other development finance institutions in Africa. Can you tell us more?
Yes, what we alluded to in the report in terms of the more cohesive approach is more cohesive than other non-traditional donors. And we're seeing non-traditional donors, the BRIC countries particularly and some others, rise in prominence in terms of their role in development in Africa. The figures are very difficult to properly ascertain, but they are becoming a force. And what has materialized is there's a shift between, or at least there's a dichotomy between these advanced economies such as Japan, which have a long established developmental trajectory in Africa. They're part of the post-World War II development paradigm, so they have united aid outcomes or aid priorities in Africa. And we've seen that, for example, in the Paris Declaration on aid effectiveness, on the Organization of Economic Communities, priorities towards aid and developmental objectives. These non-traditional donors don't yet fit that paradigm, whereas Japan does. So arguably Japan's focus in terms of development in Africa is more coherent and fits into Africa's overall developmental objectives than certain other non-traditional donors. And I think that's important when you're looking at certain structural issues in Africa, such as regional integration, which Japan has come out very forcibly to support and provide financial support, technical assistance for regional integration, which fits into Africa's overall developmental priorities, not just on a bilateral but on a multilateral front. So I think that dichotomy, or at least that difference between the BRICS and certain other traditional donors is relevant.
Let's move beyond aid and talk about physical investments. We're told that despite the challenges within Japan, it remains the fourth largest source of FDI the world over. The problem, though, is Africa sits on the margins of this FDI stock, only receiving about 0.7% of foreign direct investment to come from Japan into Africa. Why is that?
I think there's a number of reasons. Of course, you need to consider that Japan's overall FDI is massive, particularly into markets like the US, where the FDI stock is over $200 billion. So you need to consider in terms of 1.7% of a very large pie. But at the same sense, it is true that Japanese firms, particularly the private commercial firms, have been fairly averse in terms of ambitiously engaging African markets. Outside of South Africa, there's limited fixed FDI into markets which are showing tremendous potential. And part of our assertion is that Japanese firms could quite easily and could quite rationally engage more ambitiously with these markets in order to untap the latent potential which we're seeing there. You've just seen Walmart's proposed deal of Massmart. Clearly advanced economies, not just the emerging markets, are cognizant of these shifts in Africa, and we believe Japan has lagged slightly in terms of engaging ambitiously or proactively with those developments. Of course, Japanese FDI, also part of the Yokohama Declaration, they said they would look to increase private investment in the continent beyond the automotive firms, and a recent deal earlier this year of NTT buying into the South African firm Dimension Data, which of course also has Pan-African objectives. We haven't seen the scale of Japanese private investment in Africa that we think is possible and that we think Japan needs in order to engage more realistically with the continent going forward.
Let's talk about this a little bit further, Simon. We've seen Japan being a major importer to Africa, or exporter to Africa, of electronic goods and also automotives. We've seen African exports to Japan being conventionally commodities, and Japan having a very niche or exclusive relationship with countries like South Africa and other members of SADC. As Africa opens up as more fertile investment ground across the spectrum, what does Japan need to do to change this dynamic away from commodities, away from electronics and automotives, and possibly even think about using Africa as a manufacturing base for some of its products, utilizing African labor?
I don't think we need to move away from the current relationship. The current trade relationship makes sense. Africa has the commodities Japan requires. Japan has the capital and some of the goods which African consumers also require in terms of the high-end goods, in terms of the automotives. Here in East Africa, Japanese cars dominate the market, largely from the second-hand Japanese market, second-hand Japanese vehicle exports. So it's not necessarily to say they need to change the current trade relationship. I think there is scope, however, as you mentioned, for broadening that scope and for allowing Japanese companies to engage slightly more in the middle income, or at least lower income segment of the African population. And I believe that's where the BRIC markets, particularly China and India, have an edge over Japanese exporters. They're able, or they're more adept or more nimble in terms of approaching African low-cost markets, sensitive consumers operating in quite challenging environments where infrastructure plays a large role in terms of the cost of business. So I think there are avenues there that Japan needs to explore if it's looking towards a long-term future strategy for Africa.
And finally, I mean, as Japan needs to regain a competitive edge over the emerging market economies of Brazil, Russia, India and China that increasingly are becoming large trading partners with Africa, China being the largest trading partner with Africa, surpassing Japan 5 times over. What does Japan need to do for a change of approach? Because a lot of these countries utilize sovereign wealth funds and state-funded investment vehicles to enter these countries, where Japan doesn't really do that.
Well, I think, yeah, as you mentioned, Japan has the long-standing ties. The BRIC countries, many of them are establishing relations with Africa. Japan has them. It's had them for the better half of the last century. And it has an overwhelmingly benign relationship in Africa. It's slightly amorphous role between developed and obviously an Asian country engaging with Africa allows it to operate in a slightly different paradigm to your traditional emerging market, your traditional advanced economy. And I think Japan needs to, as I mentioned earlier, engage more ambitiously, and the state needs to use its quite considerable development assistance and aid, its commitment to African development, to allow its commercial firms to have a more fluid platform on the continent. And as you mentioned, we've seen that happening from China. We've seen development assistance and bilateral agreements on the state level allow a deeper participation from Chinese private and state firms across the continent. And Japan needs to be cognizant of the ability that it has in terms of paving the way for its private firms. And as yet, we've not seen the Japanese state engaging proactively on that level of dialogue. And we believe that there's a lot of scope for that.